Welcome traders. Today it's Sunday, January 12th, 2025, and we're gonna take a look into week 2, actually the first full week of the year, which is an NFP week for Nasdaq futures. So as we can see, last year was a pretty bullish year. From low to high, we managed to rally for 31%, which is pretty large yearly candle if you ask me. You can see, what you can see is that October is pretty bullish. Same for November, December, just like the seasonal tendency suggests. And January is generally a bearish month for indices. So let's take a look at the economic calendar for last week. So last week was an NFP week with NFP release at 8:30 a.m. New York Eastern Time on Friday. Thursday was market close due to Jimmy Carter's funeral. Wednesday we had some high impact news releases, and Tuesday at 10 a.m. we had ISM Services PMI, JOLTS job openings, and on Monday we had Final Services PMI. Monday is always trading day in NFP weeks, same for Tuesday, and you want to be done prior to the New York opening on Wednesday. In the chart you can see why that is. Okay, so on the weekly chart, we took last week's high and last week's low. So open, high, taking previous week's high, trading down, creating the low below previous week's lows. These three relative equal lows, and we closed between the 20% and 30% of the weekly candle, which we can see in a few minutes. Okay, on the daily chart, we had this huge down close candle with FOMC interest rate release of December. I think if you look to points, it's the largest candle NQ ever printed, which was more than 1,000 points, which is highly unusual. Sub price trade into this, busy with volume imbalance, found resistance and went down. And prior to this week, I was monitoring this SIBI and this busy creating a BPR over here. And I wanted to see if price found resistance here or displaced above it, found support and went up. But as I already said, January is generally a bearish month, so I was expecting this to go down. Okay, on the hourly chart, you can see Monday pre-market, and during London we had some bullish candles inside this SIBI, and eventually we created the top inside this BPR over here, low from this candle till the high of this candle, which is balanced. So yeah, as you can see, Monday was pretty volatile, same for Tuesday, and then Wednesday we had consolidation with search and destroy profile. Thursday market didn't open from 9:30 due to the funeral of Jimmy Carter, but Thursday pre-NFP is always a no trading day, and NFP traded down into previous week lows. Okay, let's start with Monday's price action. Okay, so during London we had a rally. AM session was a continuation. I was pretty surprised by this Judas swing because it occurred on 9:15 rather than post news release or post opening bell. So that kind of surprised me. We traded up into, this is the daily SIBI, which I was monitoring, into consequent encroachment over here, into the upper quadrant over here, into the high, and eventually beautifully into the hourly BPR. So market opened with a huge premium opening range gap. What you can see here is the first presentation, the first fair value gap inside the opening range between 9:31 and 10 o'clock. Created it, traded up, retraced into this, just passed it, and here found some beautiful support and went up into the BPR. It consolidated here, accumulated short positions, creating some retail bull flag to trap people into believing that gonna go up even more. But we felt discount arrays are being respected over here on the buy side of the curve into the high time frame PD premium array, and then we rolled over into the sell side of the curve where the premium arrays are being respected. Over here, traded down into the first presentation again, this place below it, beautiful respect with the body, is telling you it's gonna go down even more. I was expecting opening range gap consequent encroachment to be traded to, but it didn't happen, and we only managed to trade into the upper quadrant, which is around here, and we left these relative equal lows intact for the day. So that was Monday's trading. If we take a look into Tuesday's trading, we keep Monday's price action as well, like this. Okay, over here the yellow area is a sell side imbalance, buy side inefficiency on the hourly chart, where we created, let's do this like this. Yep. Okay, where we created the high of day inside the lower quadrant of the SIBI on the 1 hour chart. And if you take a look into the 15-minute time frame, which I'm gonna do for now, you can see we created the high inside this SIBI, which was created on Tuesday. So we took relative equal highs over here, London high over here, trapping traders into believing that we're gonna go up, but we displaced lower after market opening and we went all the way down. So that is what we're looking at. Let's dive into the 1 minute chart again. Okay. Tuesday's price action. Okay, so what we can see is that we created relative equal highs, waiting for New York open. You know that after 8:30 a.m. IBDA is gonna look for, is gonna trade into inefficiencies or liquidity pools. Now this is the obvious liquidity pool on the upside, buy side liquidity pool purged. Time distortion, pre-opening bell, opening bell at 9:30. Traded into the lower quadrant of the SIBI on the 1 hour chart into the SIBI on the 15-minute chart. Just one point outside the lines, little mohawk, and we displace to the downside. Let me see, let's do this like this, I think. Yeah, as you can see, the blue area is first presentation of Monday. Traded into it, consequent encroachment over here. See the bodies respect the upside or the high of the first presentation. Traded down, and eventually displays to the downside. With a tiny premium opening range gap. Respected that as well. And we continued all the way down into all these relative equal lows. There you can draw a fib extension from the high to this low. And as you can see, traded into negative 0.5, negative 0.1, negative 0, negative 1.5, and eventually negative 2.5, which happens quite a lot. So during the true day, between 9:30 a.m. and 16 p.m., we can see that 9:30 a.m. created the high of true day and the high of the 24-hour day, and the low was created between 15 p.m. and 16 p.m., which is classical. So as you can see, the SIBIs and premium arrays that were created, bearish order blocks were all respected. On the way down, beautiful price action if you were on the right side on Tuesday. Okay, let's dive into Wednesday. Okay, not so many annotations for today. But as we know, we went into NFP release on Friday, which means that Monday should be a good trading day, Tuesday should be a good trading day, and Friday can be traded, but only after 10 a.m. I'm looking for setups. And Wednesday and Thursday AM session generally creates these search and destroy time distortion consolidation profiles, which were involved here. Post London, we created these relative equal highs. We took them, displaced to the downside, managed to capture tiny scalp over here. Entered here, and closed all the way down to partials. And eventually, I think this was my terminus where I closed full position. Okay, so during the AM session, which started obviously at 9:30 a.m., we created these 1, 2, 3, 4 quadruple buy-side liquidity pools. So retail thought like, okay, we're probably going down. We found resistance here. And let me see, just post 10 a.m., we took these relative equal highs and we reversed to the downside. And then you think, okay, we might go lower into these relative equal lows. Went all the way up, took buy side again, took sell side again, took buy side again. This is typical for a search and destroy day, because if we draw this, maybe I should draw it from this point. You can see we traded all the way, all day around this equilibrium level, which is typical for a search and destroy profile. Another thing that you could mention, how you could anticipate a search and destroy profile unfold, was the first presentation, which was created between this candle's high, this candle's low. You can see that price trades around it, stays long time inside this fair value gap, so you can already anticipate a low resistance liquidity run won't unfold. Okay, going into the next day. First day, as I already mentioned a few times, it was the funeral of Jimmy Carter, the president. So that's why the markets didn't open at 9:30. Which is here, 9:30 a.m. New York session through day was closed. But Thursday again in NFP weeks isn't a trading day for me, and it shouldn't be for you, because if you look back into old price data, you can identify that Thursdays pre-NFP most of the times create nasty price action. Okay, go into Friday's price action. Okay, maybe close. Oh no, not closing this one. Okay, so what happened on Friday? On Friday, generally, time distortion pre-NFP. At NFP release at 8:30, you can look onto the into the 15-minute time frame and look for swing highs and swing lows. Most of the times when you look for 15-minute swing highs and swing lows, price gradually trades towards these reference points, but with NFP release just in 1 minute, trade into 15-minute high over here and 15-minute low, 15-minute low over here, 15-minute low over here. We traded into this SIBI. Here the market opens and we can see that this upwards price action was just a Judas swing, and over here we can see the first premium array being respected. Over here the first presentation, the body is trading just outside of it, and we trade to the downside into, if you take Wednesday's high, Wednesday's low, and we just create a symmetrical price swing over here, a symmetrical projection. We can see that Friday's low was exactly inside this projection, and we could also measure this protectionary stage, and you can see that price traded into the negative 2.5 level as well. So yeah, over here I can draw my high time frame levels as well and just clean something up over here. Remove. Okay, maybe go back to the 1 hour chart. Okay, what I was expecting after NFP release was trade into this previous week's low, this previous week's low of last week. So those are the high time frame levels I was monitoring. As you can see, we don't trade pre-NFP, so we wait at least 15 minutes. And you can see here we had a beautiful shorting opportunity into these previous week low levels. We went all the way up into first presentation. I managed to take a little long setup over here because sell side was taken on the downside, so I was expecting some kind of retracement going into 11 o'clock. Note how the wicks respect consequent encroachment of it, went all the way down, didn't manage to take this low because this low over here already took previous week's lows, and as you compare this chart with ES chart, you can see that ES did manage to take out this low. We went all the way up during PM session into previous day low. Let me see which day this was. This was Wednesday's previous day's low. Traded into it at 2 o'clock. What do we know about 2 o'clock? 2 o'clock starts the PM trend. And the PM trend can either be a continuation of the AM trend or be a reversal of the AM trend. And as you can see over here, trade all the way down with displacement during the 2 PM macro. Trade into first presentation and just some, let me measure this. Another plus 100 points to the downside. Again, note how these previous week low levels are being respected. We already know from ICT himself, if a liquidity pool is taken, just like any premium or discount array, they will be used into the future. And this is a beautiful example of that. Okay, hope you learned something. I will be back next weekend to review next week's price action, and I hope hope that you have a nice week.